Drop it.
And good morning, everybody. All right. How's everyone doing? How is everyone doing? Hopefully everybody made money. Guys, it's very easy to make money. Want to learn to make money? You came to the right place. Let's go ahead, look at the chart. A lot of you may have already jumped in on this trade and made money with this trade, and you had the confirmation with this trade. I'm in the trade. It's a slow burn down. I just entered the trade for shits and giggles because jumping online here, right? We're live. So we're live here. Let me show you guys how I navigate the system. Hopefully this is something you can learn from. Now, I just want to make sure that my audio is good. Guys, let me know. Audio good? My audio good? Thumbs up? Right? Manny was one and done. Good. All right, cool. All right. Cool. Okay, guys, so what we're going to do is we're going to go ahead and just really look at the chart for what it is. Okay, so when we're looking at this chart here, we see we have the trade design down, which is right here. You guys see that right there. Let me go ahead and mark that for you. There's a trade design down. That is the only actionable moment in the morning. Okay, and well, we come on down and then we get this moment here where the STB line goes yellow. This is your signal to maybe get out. Okay, so let me go ahead and remove those drawings. Now, if you were thinking about like, hey, should I get in? Should I get back in? Well, we know that we're biased to the short trade. We have all the confirmation in the world here, right? And so we get out here to secure profit, and then we wait for the band once again, should we decide to come on down. Now, does that make sense? I really hope that makes sense, because it really is a very, very, very straightforward approach to taking the trade and making sure that, you know, you remain profitable and biased to your thesis here, right? And so let me go ahead and let's get to trading. Let's do it, right? The gamer says that's exactly how I traded it. That's because that's exactly how you're supposed to do it, okay? So let's go ahead, get back in this. Now, I'm going to show you guys what happens when you take the trade against the trend. Now, let's go ahead and look at this quickly here. What we have here is another exit signal right here, guys. So you were in this trade, it came up into the band, right? If we jumped in here, came all the way down, came right back up. You saw it approaching the band once again. That yellow exit, right? There's some money to be made. Of course, it then turns green and it's making the move up. Okay. Now, you know, if someone is like, well, it's bearish because, well, the trade is bearish, and that's clearly what we see. Yes, it is bearish. But for the time being, what we have is a price correction. We have the candles just pretty much bouncing around from a high, low, right? And this here is the high, low, is the correction. The correction is the consolidation, right? Where the market's correcting itself, trying to figure out what the optimal price should be, right? So the market is all about efficiency and being efficient. And so, you know, we have to figure out what the price should be at this point. Now, we're going to go ahead and say the system is telling me bullish, right? Because of this. We got the green here, and then we got the yellow flashing signal down here. You guys see that? You guys see that, right? So you see that, and you're just like, oh, yeah, this thing's ready to go up. But we haven't qualified it yet. We haven't qualified it because the RSI has not broken above 50. Now, RSI breaks above 50, then yeah, there's a likelihood that this trade will be bullish, and we can scalp this for a few bucks. Okay, now we're gonna pay attention to RSI. Current value on the RSI is gonna be at about 46.86. Um, let's see here. I know there's a setting where we could actually show values. Let's see here. Is there a value status line? Values. Okay. Now we got the values there, guys, right? Make sure you have your values on. That way you know specifically. It looks like it's coming up to the 50 line here, but the actual value is 47.88, and the moving average is 37.51, trading up. Okay. So let's see here. Gabe, is trend tracker what? What are you asking me? Is Trend Tracker version 5 with the yellow half square out for us yet? It's a Game Trades exclusive. There you go. Thank you, Hot Potato. Right. So, guys, you got to understand something, right? This is a business, and I intend to make money. Sorry. That's just the way it is. This is a business. I intend to make money. So if you want to go ahead and, get the best of what I have to offer, it's over there at Game Trades. Right. I think here at Trade 48, you guys have an incredible amount of value. Incredible amount of value. But yeah, it's, if we keep creating value, right, the product becomes worth less and less. Okay. Okay. So guys, let me show you something. Here. Now I entered the trade. Right. I entered the trade here. We could zoom on in, and we could see I'm profitable here, right? So what were the conditions for me entering the trade? Well, the condition for me entering the trade was to break above 50. Correct? Did I say that? I sure did. Now, I also know I'm against the trend, guys. So because I'm against the trend, I have the mindset of I better take what the market gives me. Now, I go ahead and I'm looking at this. I'm like, okay, I was up 1,000. Now I'm up only 400, 220. This is what happens when you go against the trend. You expose yourself to that friction, right? So what are we showing here? We're showing that, hey, if you're going to go against the trend, you need to be mindful that your profit taking needs to be swift. Okay. Now I'm just going to go ahead and just chill out in this trade because my time horizon is much larger, and my allocation is really small. It's 4 contracts. Okay. So, yeah, let's go ahead and catch up to the comments here. And what do we see? We see, what's the indicator in the top right? Did you already answer that? The indicator on the top right is basically going to be our bullish thesis, our bearish thesis. It's really part of like the GT 500 suite. Okay, that's really what it's about. Let's go ahead and look at this here. We could see that there's a little more bullish sentiment, right? In comparison to bearish at this moment in time. So we're just going to hang out here. And I'm Daniel. I hope they answered the question. So what we're looking at here also, guys, you can see up here, high probability setup, retracement. So the system's telling you that there's a retracement that's ideal. It's ideally a retracement that's happening right now. Okay? It's the system is literally spelling it out for you. Right? I stand corrected. It is Trend Tracker now. It is Trend Tracker now, actually. But it's meant to compute the bullish and bearishness of GT500. Okay. So because I had that information of retracement, okay, retracement here, now it's no trade zone. So yeah, it's saying don't take a trade. It's kind of funny that way, right? We got a great candle. I'm up. I'm making money here. My RSI is above 50. I have to respect the fact that I'm going against the trend, and I have to respect my system, and I can't get greedy. Okay. And so what I'm going to do is close my position, and that's going to be profitable. Okay. And I mean, hey, look at, I'm making money while I'm teaching out my system, and I'm making money stress free now. Should I have made 1,000? Should I have kept $1,000? Yeah, I should have, right? But it really doesn't prove out the potency of the system when you read the system for what it is. So let's go ahead and read the system for what it is, because potentially I may enter the trade or enter a trade once again, based on another condition, which maybe we'll see while I'm here on live. Okay. Um, so our size is about 50, and clearly we could see that the moving average is trending up. Cool. Right. You guys can see that there. It's trending up. Now, we're getting a no trade zone here. We got a gray candle. There's nothing to do. Now, for me, the trade happens when we get above GT. Okay. Right. So the bullishness for me to maintain my bullishness, right? So you guys saw me take a bullish trade, and I was up. I didn't close. It came back down. I took my profit. I understood I was trading into a friction zone. So it's a good thing that I took profit right there. Now, for me to be truly bullish, I need to break G2 500 here. Otherwise, I need to maintain a single direction, and that is bearishness. And JMac, you're absolutely right. So what does this mean? This means that, guys, whenever we have a trade design down with a red GT, and for the most part, we have a trend tracker, red and gray and red and gray, right? For the most part, we want to look for bearish setups, period. Bearish setups, we could go ahead and wait for the next trade design to be bullish, right? And that's what is that? That's 70 points away to get the break of GT. Then we got to break the 200. A lot of conditions need to be met in order to take on a bullish thesis here. But we are just, oh boy, what, 20 points? 20 points from bearishness if we get on the other side of this band. So what do you think is more likely to happen? Now, we could go ahead and say, all right, we could go ahead and say on the break of the band, we could go bearish, or we can sit back and say, well, we have to be careful because we can probably bounce off the band. Okay. Now, because of that, we have a limited certainty in the trade, guys. It's 100% limited certainty. So why would we take that trade? Now, when I went against the trade into the friction zone, there was a limited degree of certainty for me. Does that make sense? A limited degree of certainty. So I had to take what the market gave me. Okay. So where we have a higher degree of certainty is when we come back down on the other side of this band, where we break GT into 500 to the upside. And then, of course, our system tells us high probability trade. It will spell it out for you guys. It will spell it out for you. Right now, it's just retracement, no trade. Well, what is this? Gray here, these gray boxes, obviously we got to wait for the close. But what this is essentially chop. It's really just chop. Are we making sense here? So if the dominant trend is bearish, guys, you want to go ahead and just simply wait for the band to go bearish. It will save you so much as far as like activation, headaches, and that feeling that you're doing something wrong. Because, guys, when you're trading into friction and you're trading against the trend, you will always doubt yourself. You're going to feel like you're doing something wrong. When you start feeling that way, you don't hold on to your trade. right? You don't follow through with your thesis. And then he starts coming to chop, right? Because then you start getting whipsawed by candles. Okay. So we have to be careful here. Guys, whenever you see this, wherever the dominant direction is, please, for the love of God, look for an STB line and the band to give you that confluence to go with the dominant trend here. This here isn't worth the headaches. I mean, can we all agree that this move right here isn't worth the headaches? It literally becomes, literally becomes, do I get it now with a little bit of profit or do I wait? And then when you're red, it's like, do I get out now and save my ass or do I wait? You see what happens there? Come on, let's see some hands here, man. Because this system is as much a psychological solution for traders in as much as it is a technical solution for traders. Right? JMAC, 100%. Go with the trend. Okay. Now, yes, I could make money here. Yes, I can do this. Right? Our side's about 50. Yes, I can do this. Let's go. I'll do it. But I have an expectation. I have an expectation here. My expectation is I'm really setting myself up for a risky situation. That is my expectation. My expectation is not to make money on this trade. Okay? That my expectation is like I entered the trade because visually the trajectory is bullish. However, I know there's friction in this trade. So if I do enter this trade, I know, which I am in this trade, I know that the reward is probably not gonna be there. But of course, I enter it with some sense of where the market's going. And to illustrate to you, like, it's probably not worth it. And that's why I'm only doing it with 4 contracts. Right? Guys really just don't care. So, case in point, done. Right? Now, when do I get out? Well, we're going to do this, right? Because I believe in my system. I'm going to get out when the S2B line goes yellow. How about that? That's how much I believe in my system. I'm going to get out when this goes yellow. And if that goes yellow, and then we break the band, then I have an obligation to go south, which I should have been from the get-go. But what I really want to show you guys and highlight is just how effective this system is, because you go when it tells you to go. You get out when it tells you to get out. Now, this is bonehead. Nobody should have done this. But, yeah, whatever. I mean, it's $2,000. I'm up considerably, but I need to show proof of concept here. Some people will go ahead knowing they went against a trade or went into a friction zone, and that trade goes against them, knowing for a fact that what they did was wrong, goes against them. The candle works against them. You start paying attention to that dollar amount there and start freaking out. No, if I'm going to commit to this trade, I'm paying attention to my STB line here. It's going to tell me everything I need to do and everything. It's going to be there to protect me. Why would I listen to that? And why would I use that to protect me? Well, because I obviously didn't protect myself when I decided to jump into the trade, right? Did not protect myself when I decided to jump into the trade. So I have to believe what the system is telling me. So now we got yellow here. Now what do I have to do? Oh, it's yellow, green. Because I see that, what I'm going to do is I'm going to set my stop right there and or get out of the trade. Okay. Why? Because this is a signal to be done. Now, if I was already in the trade and rocking and rolling, guys, if I was already in this trade, let's say the band right here, let's say we entered right here, we're rocking and rolling. This is your exit as well. This should be your clue to get out of the trade. Okay, cool. Protected me. Now, let's see what happens. Okay, so because I went small, hardly affects me. We're going to see if it in fact comes down to the other side of the band. Now, again, we just proved how that yellow line can protect you. So it asks, like, where would you put your stop? Well, that line is meant to protect you. Okay. If you're already in the trade and you were profitable and you see that it pops up yellow, you take your stop and you bring it up in profit, right? Because that line becomes a binary event. It's yellow. It can go up or it can come back down. Why would we leave that to chance? Let's see. Just over music. Gabe, do you do one-on-ones? Yes, they're very expensive though. Um, okay. So let's go ahead and come back to this. Okay, it's green again, but we got gray candles. Okay, so now we're moving on to the next lesson here. The next lesson is that we had a bunch of gray candles, which are non-actionable moments. They're gray for a reason. There's a reason why I lost a trade. They're gray. Not actionable. Also, no trade zone. I've been told the whole entire time, no trade zone. Other than seeing the trend and the trend going up, right? Because, hey, I'm human, but trend's going up. But the system's always there to set you straight. It's a beautiful thing. That's why we developed it. Okay. So if I want to make money, what do I need to do? I need to wait for proper bullishness or wait for proper bearishness. Correct? The system has not been wrong. I have been. What the hell? The guy saw me be wrong. The system wasn't. Now, when I decide to align myself with the system, I make an absolute killing. An absolute killing. All right, let's go ahead and answer some questions here. Can you trade with no indicators if you only had to pick one? Which would it be? That's your fatal flaw. There's no such thing as picking just one. Best TV line is day trades only, yes. Okay. So, okay. When I started trading, all I had were the trend lines. This was many, many years ago. Man, oh my God. Almost 2 decades. Holy shit. All I had were trend lines. I had best guess entries. We didn't have systems like this that did the real-time math. We had to math it out, right? And because the math was so complicated, we had to trade on the daily, or at least I did. The math was complicated. I couldn't trade out in 5 minutes. It was back then. Now what we're seeing is all the math is being done for us. So the volume matches, the speed of the market. Back then, the volume was this much. Now the volume is like ginormous. The volume matches the speed of the market. Okay, so what we have here is a bullish setup here, right? Now, the most common or most used indicator is the MACD. That's usually where every trade begins. The MACD, the moving average convergence divergence indicator. Then from there, you'll learn about the relative strength indicator, or the RSI, right? And then you learn how to put them together, right? Because you can't rely on any one indicator. And then from there, you start really digging deep. Hence, we have 1348. Where now it's, how do we create a symphony of indicators to give us the whole entire picture? And that's what 1348 is. Now I want to put this out there, right? Because, guys, if I was a prop firm trader, this would never exist. Think about that for a second. 1348 would never exist if I was a prop firm trader. But because I am a trader, I'm a really, really good trader, we were able to create this system based on my experiences, based on my vision, right? And also based on some of the problems I attempted to solve on the one-on-ones that I had with individual students. And so here we have now, the system has matured for those who've been with us since the 1348 cross, which we made mainstream popular, right? Because nobody was talking about it. And then once I brought it up, it was, everyone and their mama started talking about like 1348, right? And their own iteration of it. But where are they now? They're fucking gone, and we're here. Why? Because there's levels to this game. And we made sure that we built upon 1348, right? Because it's MACD built upon RSI, right? Then from that core, you have 1348, which is built on top of that. And the thing is that, think about it for a second, guys. You have the MACD, which is a 1226. And then you have a 1348. And what do you have there? You have confluence, if you will. Right? If you got the MACD trending up, but then the 1348 trending up, you got two sets of indicators that give you confluence. Now we top that off with RSI above 50 and above its moving average. Now we have three layers of confluence. Right. And then we go ahead and we throw in our proprietary mix and our little magic here. And you have levels of confluence that help you make and articulate the most probable trading setup. Okay. So if we go back here, we knew there was nothing there was nothing. There was nothing here. And even though we had this trade design up, it still told us no trade. We have conditions that need to be met because we have other items in the system that need to be in confluence before we're bullish. Am I making sense? So there's obviously certain things going on in the background that we're saying, hey, wait a second. We need multiple levels of confluence. I'm never going to, guys, I'm not going to set you up for failure. I am not going to be, no way in hell. Not going to set you guys up for failure. Okay. Let's see here. Let's see. Rob Dale. Yeah, I like Keaton Grace too, man. The guy's really chill. He's very, very neutral. More of maybe a swing trader, right? He covers the bottom market, movers, shakers, that kind of thing. He's a cool guy. I like him. But this here, whole another level. So let's go ahead. Get back to this here. So nothing to do right now. Nothing to do. I almost wonder if Keaton Grace will become an ambassador of 1348, because this system would definitely help him in his ability to articulate the movers and shakers with specific stocks, right? Right? Or maybe you guys could go ahead and watch him, and as he's talking about the movers and shakers, sort of kind of like guide him. Be like, okay, look at we're on a while, we're on a daily. This is really what's going on. We might want to wait till we break this and that, right? The thing is that you guys have so much awareness, right, that you can almost always check the work of your favorite YouTuber, right? If he trades support and resistance, hey, that's another way, right? We have support and resistance in this system. See, guys, we're not a one-trick pony. We're support and resistance. We're trend and momentum. Guys, we're okay. Support resistance. We're long trend, medium trend, short trend, right? We're volume. Think about that, right? We're strength and trend. And then we have, an AI component that tells you when to trade and when not to trade. There's so many things that make up the 1348 system. It's just incredible. Like, one of my, this is one of my greatest life achievements. Okay. Rob Dell, thank you. The people's champs. I like that. Okay, so what are we seeing from this? What can we gather from this, guys? So wait. J Mac, are you there? Because I think that's what you were waiting for. It was a break of the band, right? We needed to maintain patience because we know, hey, we're not above GT. We're not above the 200, right? We have the band here. Gives us the yellow signal. Who paid attention to this? Another yellow signal, right? Hey, get out. It lets you know to get out before, hey, something bad might happen. Now, guys, it's not like a de facto indicator of an exit. It's a look at, bro, you're in the trade. If you're profitable, bring your stop up in profit, right? Bring it up to a dollar amount that you're comfortable with and you're okay with making. Should this candle low pass my yellow line, low pass the band, and then come on down. Okay. So this here, guys, when we start, okay, check this out. Check this out, guys. When we start looking at the components of the chart here, right? So let's go ahead and look at it. We have let me make this bigger. Let's really talk about this. Now let me choose some drawing. Let's talk about this. You guys see this here, right? Let's make it a little bit bigger. Right there. Okay. So let's look at the components of what this system is. This was the trade design down. It lets you know. Let me see if I can get that on screen here, right? There, you guys. You guys see that? Okay, cool. Right? Trade design down. And we knew it was coming on down, but initially we have GT that was green, so we were going against the trend. It eventually became neutral until it broke the trend. And this here is the high probability setup right here, right? When you get that break. And so now you have the band, your STB line, your candles, and GT. Multiple confluences. Now let's go to the bottom of the chart. Because the bottom of the chart also includes RSI. RSI below its moving average, also red, trending down. Here's an optimal zone. Now, see guys, the problem with patience, right, is, no, you guys see that there. The problem with patience is the unknown. Now, one would be impatient to jump into this trade here, right? Because, well, they don't know if they're going to miss the train, whatever the case may be, right? They just don't know. And then they get into this trade and they still don't know how far down it may go, right? It's just trending down. It's a high probability setup. That's what you do know. It's a high probability setup. That's what you do know. And so now you're focusing less on the candles and you're focusing more on the system. And you're doing an indicator read for 64 points. Now, one NQ contract makes you $1,200 on that move. 224, right? 10, 12,000 on that move. Patience. So someone like myself who has a much larger port and I can scale up to 20 contracts, it is in my best interest to be patient and to take those moves, right? I need those moves. I need to be as confident as, oh my God, 95%, almost 95% sure. Right? But I think we also proved the other point. You can't count on any one indicator. And that's why it's a 1348 system. And that's why there's nothing out there quite like it, because we built the math to make sure that each indicator can talk to one another and then form that thesis for you to guys, so you guys can take that trade in a high probability area. Does that make sense? Does that make sense, guys? And so here we are. There we are, hanging out here. Absolutely nothing to do except it says we're going short. All right, Daniel Mitch says, with smaller accounts, but trading micros is harder to be patient because the dollar amounts are smaller. But you're right. You have to trade small to win big, and trading small means port grows. Yeah. I'm also going to go ahead and I'm going to be Captain Mega Dick right now. Right. Here's the thing. If you ain't got 10 years experience, and you didn't save 100K to put into a port, you have no business wanting to make the type of money that you think you should be making. Because you haven't put in the work. You haven't put in the work to amass the wealth so you could actually build upon it. You didn't, right? And that's why everybody's taking on like the cheap fucking route, right? The college route of a prop firm. I'm sorry. It's just, that's why they exist. They target a specific segment of individuals, okay? If you're not going to put in the work, okay, so that you can have those very real expectations of compounding your monies and the growth and to make the $1,000, $2,000, $10,000 a day. If you're not putting in that work, you don't deserve for it to happen. So therefore, if you're trading micros because you weren't able to put into work or you did not have the ability to put in the work to save money to build up a port, then that is the card you're fucking dealt with. And if that's the card that you dealt with, it's time to make lemonade, motherfucker. You have to go ahead and work with what you have and just understand that that's the card you were dealt with. So build on that. Okay? Build on that. Right? Now, the question here is would it be better to turn off candles? Well, we've done that. We've done that exercise. We've done that. Okay. Guys, it just works. It just works. So, yeah, back in the days, I would yell at you guys for doing stupid shit. Yeah, those are fun, right? It was great for YouTube, but it wasn't good for my health. You guys were listening any goddamn way, so it's like, whatever. But anyways, we come back to this, and we know the whole time there was nothing to do here. So let's get candid here. Why did I lose money? Because I chose to. I lost money because I chose to. Because I chose to fuck around and find out, do whatever the fuck I wanted to do, have disregard for the system, right? And I lost money. I turned it to you. If I want to be successful, I have to emulate what other successful people are doing. And so myself and Hot Potato have spent 3 years, 3 long, grueling years, giving you the best tools to succeed. And so if you want to be successful, you got to do what successful people do. And that is listen, young grasshopper. Listen, Linda. That's it. And if that means you're not going to listen to me because I can't sit over your shoulder and yell into your ear, I can't, then your only option is listen to the system. Still no trade. Yeah, makes it coffee and Pepsi. Things about to get pretty wild from my toilet. Anyways, here we are. Nothing to do. Nothing to do, guys. Hold up, hold up, hold up, hold up, hold up, hold up, hold up. What if we used one indicator? What if we used just the RSI? We might have gotten into a little bit of trouble, might have freaked out, right? A couple of times. You get in here, then you get the breakdown here, on the side of the band, or the breakdown all the way down here. Freaks you out. Why? Because you're not trading the system. But let's see what it looks like when we get RSI. We get a trade design up with the confluences above GT, above the 200. In fact, why not? Instead of being patient, why not just set your order there and come back when your order gets filled or when it doesn't? On the other side of this, right? We know that if we break the band down and we come on down this way, we know that at or about here, we got structure. Let's look at this structure. 1, 2, 3, 4, 5. 5 candles right at this level. That's a level, boys and girls. Support, support, resistance, right? I will then go ahead and put a sell down here. That's it. So now this is my range. And we're done. There is no path to shorten the learning curve, guys, because something has to happen, and it's something has to happen here, where when you're learning a new skill, right? Your brain starts making new connections. It's what they call, I believe, is like a synapsis, right? The brain is formulating new connections because you're developing a new skill. And what you need is, a fully developed skill set, right? The brain needs to continually make those connections. Now, if we go ahead and we try to shorten things, then yeah, you end up taking shortcuts, and then things might end up happening that you don't quite fully understand. I'll give you an example, right? Someone could ride a bike and know how to ride a bike. That doesn't translate to someone knowing how to ride a motorcycle. And if someone can ride a motorcycle, that doesn't mean that that person can ride the motorcycle at slow speeds. And if the person can ride it at slow speeds, it doesn't mean that that person knows how to make an emergency stop. And if the person can make an emergency stop, it doesn't necessarily mean that that person knows how to do a U-turn, if you will. Right? So you see, like, even someone learning to ride a motorcycle, there are different components to it. There's no way to shorten that. Why? Because if you do, chances are you're getting hurt. 100%. Right? And so that's why, as with anything in life, you take the time to learn it through repetition. You take the time to obsess over this, right? Now, may trade with only the 20 EMA. Some people may trade only with VWAP, right? For him, the 20 EMA, anything above it, bullish, anything below it, bearish. That's probably how he's working, right? And he's playing in between levels. He's trying to keep it simple, okay? But even that requires for him, he had to develop a sense of the market, right? He had to develop and understand, price action and how it behaves around the 20 EMA. Because we have the 24 EMA. We use the 24 EMA, or we used to, as a reversal signal. You guys remember that? So again, guys, it's important that you find a system and then you master the system. Here, what we tried to do was make a system layman. That's what it is at 1348. We're trying to explain exactly what to do. That's what this is. We're telling you exactly what to do, unlike, most other systems, if you will, won't do that. Okay? We're telling you, hey, look we're bearish. Do not go against the trade, right? We have neutral candles here. Don't take these trades. We have a no trade zone here, right? We're not bullish until we get over GT and over the 200. Otherwise, we remain bearish. And then we have structure here. The structure, I didn't even zoom back this far, but it's clear as day. Look at all that structure there, guys. There's so much structure. So we're bearish. Now, it comes on down and fills me. I then need to take my stop and bring it down and protect myself, right? Start managing my risk. So here we go. I could have just done a market order, taken it up, and then get caught here. Right on, guys. How many times that's been done? Or I could let the trades come to me based on the environment and based on what the system's telling me. We don't have to make impulse decisions in the market. The system's saying, hey, we're bearish. So what I do is I set my orders away and I buy myself time to get that confirmation that, hey, we're bearish. As opposed to entering here, holding, going against the trend, and then getting wrecked. Essentially what I did when I first entered the trades when we started the stream. I do not have any type of intellectual advantage over any single one of you. I do have I guess maybe a faith advantage and a repetition advantage. That's probably it. Anyone can do this. Allow yourself to take the proper reps and develop the faith. Right? So we're just chilling here. There's really nothing to do. I guess now we could open this up to questions. You guys have questions. I have answers. Any questions? It's quiet here. They designed right before pre-market. Should we ever hold them into open? That's a fun question. The answer is no. No. Okay. Um, reason being is two completely different markets. One market's slow, no volume, right? The other market's a lot of volume. You don't do it, right? That's why people say don't trade after hours and don't trade pre-market. If you are in a trade design pre-market, you got out before market opens, right? Because that 9:30 time when all the traders flood the market, right? It becomes a literal war. It's, you know, it does this until it finds a direction or it rounds up, but then comes down. Don't do that. Okay. Let's see. How do you get yourself out of a rut? Well, depends what kind of rut we're talking about. Are we talking about a mental rut? Are we talking about a mental rut? Or are we talking about like a financial rut? What are we talking about here? Anybody? Well, not anybody, but he asked a very specific question: how you get out of a rut? So, question for Monday: are we talking after a big loss? Oh, a psychological rut. Okay, after a big loss. Um. Okay, so now, okay, so I guess the question should be, right? Was that loss, was it manageable? Could you have managed that loss? Could you have made that loss less impactful? But ask you, could you have? Now, Philip is right there. He's getting there, right? But yes, how could you have made that loss less impactful? Right. It's not a question of how do I get out of a rut. It's a question of did I document what just happened, how I felt, what I could have done differently, and then you go ahead and you write that contract to yourself. Next time, I will do things differently. Right. So, Philip, we'd have this conversation on a one-on-one. He suggests step back, determine how you feel about it, and use it as motivation to get better at risk management. Absolutely. It's basically what I'll tell everybody. You see, because guys, losses are avoidable. With the right strategy, big losses are avoidable. Hence, we only risk 1% of a port. A lot of people don't like that, right? Like, 1%, damn, I don't want to make more. I had somebody in the chat like, wait a minute, what percent? My goal is $300 a day. Okay, so tell me how you got a $30,000 port. The math ain't mathing. It just ain't mathing. You start with 1%. You make 1.5%. You bank that 1%. You take that 0.5%. You throw it back into the market, play with free money. That 0.5% turns into 2%. Great. Now you bank 2%. Now you got a whole 1% to be a DGen. Go ahead and be a DGen. Let's say you won 3 trades in a row. That 1% now gets you a 3-1. Now, congratulations. That's how you get a 5% day. You can only get a 5% day if you bank the 1% day first. Make sense, guys? Right? So your goal should always be 1%. Bank it. Make sure you don't lose it. That's your goal. You can't have a 5% day unless you have a 1% day first. And so in order to make sure you have a 1% day and minimize your risk, you only risk 1%. So now it becomes a binary moment. It becomes binary, right? It's either you're going to get it or you're not. But you're not going to lose 10%. It just doesn't work that way. Okay? So make sure you guys bank that 1% because, again, you can't get to 5% unless you got 1%. It's just, and believe it or not, guys, believe it or not, That's the reason why some of you end up taking losses, is because you're up 1%, maybe up 2%. You try to go for 5%, and then it reverses on you, and now you lose 2% or 3%, still hoping for the 2 and the 5% that you have planned the other way. So now you end up getting married to the trade because the trade showed you its potential, but not its reality. The trade's potential and its reality are two very different things. The trade's potential, all trades potentially, can make you money infinitely. The reality is it's not yours until you secure the fucking bag. So if you see that you're up 1%, you secure it. You're up 1.5%, secure it. Bank one, play with 5. Let's see what we could do. We lose to 5 or 8. Cool, market. You ain't getting me, bro. I'll see you tomorrow. We'll compound it. That's it. The market's potential and reality are two very different things. More traders need to go ahead and trade reality, not potential. Please, let's start doing that. Let's all agree. Let's raise our hands. Let's make that contract to ourselves. We trade the reality, not the potential. I go back to this steno trade. Nothing. But nothing happened to me. I'm safe as hell. Hey, why? Because it's a no trade zone. It's a no trade zone. Ta-da! There's nothing for me to do. I'm just like, it's if it comes all the way down here and fills me, it's gonna be a trade, right? It will read, bearish. If it breaks up, it's gonna read bullish. But right now, it's a no trade zone. There's nothing to do. That's why I have my orders so far away from the candles, because I want this. I want the candles to earn. Huh. Let's see. I'm having big anxiety, even when risking only 1%. I'm not beholden to trading either, which doesn't make sense to me. Okay. Yeah, some people just can't take a loss. It makes them sick. The idea of losing makes them sick, right? Because for whatever reason, a trader takes a loss as permanent. It's really, really interesting when the loss is only temporary. Because when we lose and we lose fast, it puts us in a position to win and win faster. And when we trade small, we win big, right? So we have to go ahead and say, okay, well, if we lost, we were supposed to lose because it's setting us up for the right trade. Embrace the losses. I embrace my losses. You guys have seen me, but you guys have seen me live. Right? You guys have seen me live lose 10, 12, 15 grand, and then I end the day up 100K. It's part of the game. It's part of the sport we play, right? Quarterbacks are going to get sacked. Running backs are going to get tackled. People are going to get hurt. It's part of the game. It's trading. You're going to win. You're going to lose. You're going to be right. You're going to be wrong. It's going to affect you. Oh, yes, it is. Right? But see, the reason why it's so beneficial, right, to trade 1% is not only to protect you from yourself today, but to protect you from yourself tomorrow, right? Because go ahead and you say, oh man, I lost 6% and you're in a bad mode. And it wrecks your whole day. You're at dinner. You're fucking mad, right? All you can think about is like, I need to make that money back, right? And then 6 o'clock hits and market opens once again as after hours. And all you're thinking about is, I got to make this money back. Well, the market's open. I might as well try my best to make my money back now, right? Just messes you up. And if you don't do it, then you come into the next morning and you're like, I got to make my money back today. It 100% just messes you all up. So that's why, It's not just about the 1% risk on the trade. It's also protecting you from your own mentals, your own psychology. All right. DA though, 100K in a day. That's not wild, dude. That's what I do, brother. I've done 1 million in a day. I have. I do it consistently. I do 500K in a day. I have. And I do it consistently. Okay. So, Christopher is, you're putting so much pressure on yourself. If that's innately being a man, we talked about this yesterday. And yes, we don't want to do the revenge trading. That's why we cut it off at 1%. Now, if I'm winning, okay, now here's the thing, right? If I'm winning, and if you got Michael Jordan on your team, and he's fucking killing it, he's in the zone. Do you take him off? Do you bench him? No, you don't. You keep it there. You let him cook. You let him cook, you make your money, right? You're letting him play, right? So if you're in the zone and you're making money, as long as you got your 1% protected, you fucking cook. You go, you cook, you make your money. That's it. That's how I do it. When I'm in the zone, guys, I am in the zone. I'm cooking. You ain't taking me out. I'll go for it. I am going for it, right? So focus on that 1% because that's all you need is to get the needle on over to your side and you build momentum, right? You get the needle all the way over here. It gets a little tough, right? So that's why we keep it 1% because we could always keep the needle around here. Does that make sense, guys? We could always keep it manageable, right? 10% risk. Oh, no, I lost. 25% risk. Oh, no. Right. It's really, really hard to manage that. 1% risk. You won. Oh, crap. Yeah. Bank it. Right. Another 1% risk. We won. Oh, crap. Everything's in my favor. I'm going to keep cooking as long as I'm protecting my 1%. That's it. Let's see. Anybody else? Anybody got questions? I got answers. I've been in this game way too long. Actually, 1 second. Hold on. I gotta check my schedule. I'm having too much fun with you guys, and I believe I have a 101. Let's see. EJ McKenzie. EJ, are you on the stream? EJ, are you here? Oh. Okay, Ami. Yes. About reversing instantly. Guess what? You don't. That's living in a candle. That's something we do not encourage. Right? That's basically chasing skirts. We don't chase skirts. Right? If the trade goes against you, then it reverse, and then it goes against you, then it reverse, then it goes, no, you're chasing skirts, you get death by 1,000 cuts. Tons and tons of chop. Okay, so guys, look it. I didn't get filled to the downside. I haven't got filled to the upside. The market, right? Whether it comes up and fills me or whether it comes down and fills me, hey, we don't know. We don't know. What we do know is that this is chop and we want to know part of it. This is why we set our orders here, right? Because I'm not going to get seduced, Tommy, to answer your question. I'm not going to go bullish and then go bearish because of this to then get freaking whipsawed on this bullishness here, right? Make sense? Yeah, Ryan, that's almost the worst choice. Actually, guys, Ryan's reformed. Ryan used to trade that way. Ryan would go green, then he'd go red, and he'd go green again. And like, he's playing double dutch with the fucking candles. It's like, no, we don't need to do that. What do you think about SLV? Looks like it wants to pump soon, in my opinion. All right. Out of curiosity, yes, I still use Wrinkle. Guys, I have a war room for my trading. Okay, so yes, I still use Wrinkle. So someone asked me about SLV. All right, cool. But before we do, I want to show you guys something. Right? I got a fill here. I got a fill here. It's still an X. It filled above the 200, but it's still an X. All right, cool. Now it's making me money. Okay, it's making me money. This is a really, really big candle. It's a humongous candle. Right? And so I have to go ahead and take what the market's giving me. Now I have my stop down here. I'll go ahead and bring it right there. Now, why did I put my stop right here? My stop's right here because, guys, this puts me back in bearish territory, right? This is my stop. Okay, let's go ahead now and let's go ahead. Long position here. All right. Let's see if that's my target and this is my stop. That's a 1.58 trade. There's a 1.58. Now, when I look at this, I'm saying to myself, it's a 1.58 trade. We just passed the 200. Our side looks like it's getting cooked up here. I did make some meaningful money here. Right? This is money that, yeah, this is meaningful. It's $1,700, right? But the trade's not quite there for me, right? Because we're just breaking the 200. So I'm still trading on the side of caution. I don't give a rat's ass about my own bravado. I just care about making money. So although that's my target, we have it right here. It's a 1.58. Our size cut. Yeah, we got multiple confluences here. Oh no. So wait a second. Wait. Hit the rewind button. We're not going to trade the potential. We're going to trade the reality. The reality is I'm up $1,200, $1,300, $1,400. The potential is it comes all the way up here. Maybe I make $4,000, but that means nothing to me. Why? Because I'm letting the potential govern my reality, right? And so the reality is this candle came on up. This is a very, very big candle. The reality is we just broke the 200. The reality is I'm here to make money. And so if we get over the 2,000, get over 2,000 right there. Wait, one more time. Go ahead. 1, 2, 3. Do it. Another pump. Come on. See, my reality. Well, let it slip, huh? That's potential, but I need to secure this bag. That sucks. That really sucks, right? You guys are seeing it. It like sucks. I got married to the potential, and now my reality is sub 1K. Interesting. I'll just go ahead and take that. That's on me. Yeah. You guys see what I did there? Right? You guys see what I did there? Yeah, what's up, man? But you guys get it though? You know? And so now we go back to this here. Back to this. And I will say to myself, okay, if we do have a continuation, cool. I'm going to make it on my money. I'm going to wait for it to come back to the top of this wick. I took my profit. I turned potential to reality. Did I not? Could have been a lot more, right? But that's what happens when you focus more on potential than on reality. The reality was it was up $2,000. That's a lot of fucking money, right? So now, if I'm going to be bullish, I have to wait for this to come right back up and then maybe just fill me here. But I'm not going to chase the candle. Am I making sense to all of you? That's scary, huh? That's scary. Look at that. Why? Again, like I said, we know we just passed the 200. We know that there is risk in that, right? Because the 200 usually remains undefeated. And so if it breaks, it's like a broke and it might come back, might zone in that, in the range around the 200, or it might just take off. But I always trade on the side of caution. So now let's look at this, right? So we can get a retracement. What I'm looking for, okay, what I'm looking for is, does this turn yellow or do we bounce off the top of the band? That's all I'm looking for. Okay. So does this turn yellow or does it bounce off the top of the band? So here we go. I'm gonna lower, right? Because the market has given me an opportunity to buy in cheaper. Should we bounce, right? It's coming on down. So they're going to break that band there, yellow. It's going to go yellow. It's going to come on down, or it's bouncing from here. I'm going to go ahead and say it's going to bounce. That's literally what I'm saying, but I'm not in the candle yet. Not in the candle. I'm not chasing the candle. I'm not doing anything. I'm not doing a market order. I'm not doing anything. I'm saying if you bounce, come fill me. If you don't bounce, all right, we're getting some evidence that it won't. The RSI above its moving average. The moving average above 50. These are some things that we have to consider, right? Okay, cool. Now, if you were in this trade here and at 18,609 or 18,630, and it took this up to 684, it's a 50-point move. You got paid. And that yellow line just gave you a decent warning. Just get profit. Right? Now, I'm in the trade, but for a different type of reason, right? But this is the most actionable moment on the trade. Right here. Or maybe here. Here or maybe here. All right. Kim, glad to have you back. You've been MIA for a year. I'm glad to have you back. Come on home. The doors are open. Come on home. All right. So we're just going to hang out here. We're going to hang out here, see what happens. Okay. Let's go ahead. Zoom on in. And I made a conscious decision. While the candle was getting away from me, I was either going to break the band and go down, or I was going to bounce. And so it bounced. And so now we're up a couple of $100. But the market showed me what it does at or about here. So I'm not fully convinced that the market has me in its favor. I still have to trade defensively. And I still have to look at this as I need to take my profit. I need to take what the market gives me. I need to trade reality, not potential. The reality is it's come up this far previously. That's the reality, right? The reality is I'm up 500 again. I was up 500 again, which would have put me over $1,000 between the two trades. That's the reality. Okay. And so, let's see what happens here. The reality, we see the candle struggling. We see it struggling. Okay. We see it struggling. So let's see here. I can go ahead at the next print of $500 right there. Well, we gotta make this quick. Or not. See, 400, 360, whatever. You know what? I'm not going to be deer in headlights. I'm just going to go ahead and secure that trade. That was about $500. Now I can stair step this trade. I made money there. It's coming back down to the 200. All right. Then I'll go ahead. I'll buy right here. Now I need to be fully convinced if I'm going to go in, right? We got 3 bars of momentum here. We got our side being bullish. We have more evidence that, it's going to hang around the 200, at least at this moment in time. Then we do that it's trending on up. So once again, I stay away from the candles. And should the candle decide it wants to come and pick me up right here, that's great. I'm cool with it. That's how you scalp. That's how you trade, right? However, I want you guys to make note of this. I was not trading against a trend this time. Yeah. It was easier for me to make money because I wasn't trading against the trend. I was trading alongside the confluences, right? I just happen to know when we read the room, we're around the 200. Shaky. But I was not a contrarian. I did not go short. I did not go against the trend. Okay. There's easier money to be made with the trend than against it. And as you can see, it's literally doing the same thing all over again, coming back down. Now, is it going to break it down? Maybe. But again, this is the 200. Let's try it one more time. Has no obligation to fill me this time. I'm just still trading the trend to the upside. Wait a second. Right there. X. Does this mean we go south? No. This means no trade zone. That's what that means. Okay, back to bullish. Let's see if it fills me. Okay. And then I'm just going to do the same thing again based on the reality, not the potential. The potential is coming way up here. The reality is it's really struggled around 18,711. There you go. And it comes back up, fills me. I know where it's been. I'm not going to go ahead and say, well, this has the potential to go up to a level. I'm here to make money. I'm not here to speculate. That does. When you start trading reality instead of potential, you will start trading with far more confidence. Hey, you know what? Let's see here. Jeez. Let's see. All right. Let them go here. I'm not gonna chase this down. You know what? I'm gonna leave that trade there and just walk away. Because I know if it comes right back up, it's gonna fill me. And it's gonna hit my target. It, it's it's a damn near gimme because of the evidence on the chart. So we trade reality, now potential. Anyways, guys, I'm signing out. Yeah, signing out. I hope you guys learned something today. I know it was a really long stream, but I really hope you guys learned something today. All right. I gotta make sure I kill this stream. Peace out.